It's not who you are underneath. It's what you do that defines you.
What is going on, everybody? What is going on? All right, guys, so we're going to go over a couple things here today. Specifically, yes, we're going to go over the flip challenge. The day has finally come. Obviously, like the last flip challenge, I am first here, just because I think it is kind of crucial that we mention the flip challenge here. How it's going to work, obviously, if you haven't gotten plugged in yet, just make sure you get plugged in. Okay, very, very simple. We are going to be going over each and every single trade on the flip challenge here. Last flip challenge, I made about $40,000 live in front of you guys. I also basically completed the challenge in like a week. Didn't really care. After a week or two, I just started trading my own cash just because I didn't want to waste time and waste my energy, because I might as well just make money, big money, when I'm trading. So yeah, very simple, guys, right? If you're just starting, 500 to 5,000 is what I recommend you do this. This is a very high risk challenge. You can take your own trades if you would like. You can do what it is that you would like to do. There's specific pairs and trades that I'm going to be taking. Just like last time, I am going to be sharing my account. I'm going to be showing what trades I'm going in, what trades I'm going out of. Okay, I'm starting with $1,000. You can use some of the free signals, courses, whatever it is that we're using as well. Okay, just make sure you get set up. Okay, feel free to message the Discord, me, Shania, or Nadia, and we will get you set up. Okay, I repeat, if you have any questions on the flip challenge, all you gotta do is message me or Shania or Nadia in the chat. Okay, so message Shania, Nadia, or chat in the Discord, and we will get you instant access. Okay, now how are we gonna go about this flip challenge? I will go over this very quickly, okay, while we're on the call here, so that way there's no confusion here. Okay, nobody's confused, because a lot of times people get confused, and this happened last time. Some people were confused about what trades I was going into, in and out. I tried to make everything very simple so there's no confusion, but guys, I get it. Sometimes people get confused, okay, and we can't fix everything, okay? So I am gonna break down some stuff here very quickly so there's no confusion here on the flip challenge. Okay, if you are in the Vault master classes, you will be able to see this. I have a framework here that breaks down the flip challenge. Okay, now I will break it down on here, and this framework is given to everybody in the flip challenge chat. Okay, so if you're in the flip challenge chat, you'll be able to get access to this. I might or might not follow this framework, okay, to a T. Now, what I actually do want to announce is this framework here. I'm going to give you guys some insight here on this framework, because at the end you'll be able to have AI actually help you with this flip challenge, and I'm gonna show you how once I go over all this. But so when we talk about flip challenges, I personally don't like trading with flip challenges. I don't like doing them because it's not the best habit, okay, to instill when you're first starting off, right? Obviously, when you're starting to trade, you want to have good habits. You want to trade with proper risk to reward. That's why we always recommend, okay, we always recommend you following a plan and going even the prop firm route. But if they're desperate times sometimes count for desperate measures, and I like to sometimes showcase what's possible with trading, because trading is such a beautiful skill. Sometimes you can do some pretty crazy things, okay, in the market. Okay, I've had experiences where you guys can see, and some of you guys have been following me for I don't know how many years. Some of you guys, maybe this might be the first call that you've ever seen me on. Some of you guys have been following me for 10 years. So you've seen me do some crazy stuff on Instagram. You've seen me do some crazy stuff over the last couple of years where I've taken, you know, anywhere between, you know, $1,000 to 10K. I've taken, you know, 10K, you know, to 50K in a day with crypto. I've had 30K trading days, 50K trading months, okay, 100K trading months, 100K trading days in crypto, which is insane. Okay, even with algorithms, I've traded algorithms, guys, and I've put my accounts out there on Instagram for everybody to see, and I've had 80K and even 100K returns over 2 to 3, even 6 months, trading proper risk 2 to 3% every single month. So we've done this a lot. Okay, this flip challenge 500 to 5K is very simple. If for me, I'm doing 1,000 to 10,000 because last time I did 500 to 5K. Okay, but I want you guys to be, but obviously the numbers are going to be adjusted depending on the 500 to 5,000 and whether you're 1,000 to 10,000. And obviously this PDF is going to be from 500 to 5K. We have another PDF I'm going to give out access to everybody that's going to be 1,000 to 10,000. I will give you guys those PDFs here in just a bit. Okay, it will be adjusted. Obviously the scenario will also be adjusted as well. Okay, so what is the plan behind this? How have I done this past? I get asked that multiple times. Well, first there has to be, and I'm not trying to sound corny here. Okay, I don't want to sound corny on this call. But sometimes the most corniest lines have the most truth to them. You have to have this thing called freedom of outcome. Okay, have you ever heard of the idea that you are attached, connected to everything, but attached to nothing? Okay, connected to everything, but attached to nothing. What does that mean? It means that you have the ultimate amount behind what you're doing and behind what is going on. Okay, give me 30 seconds, guys. Someone is at my door. So because someone's at my door, I need to make sure that I'm opening it on here. Okay? Let me go open my door real quick. Okay. Okay, guys, my bad. I'm sorry. I had to get that. Do apologize. But freedom of outcome. Now, what does freedom of outcome mean? Connected to everything, but attached to nothing. Okay. Now, I've done this here, and I like to be honest with you guys because the honesty and transparency for me is like the biggest thing. Sometimes these challenges take me a week. Sometimes it takes me a month. It could take me 2 months. Who knows how long it'll take. Okay. But what I'll do here for you guys is I'm going to show you the strategy on how we do it. So that way you can go out there and do it yourself if you don't have me here. But I'm going to tell you guys the numbers here and then you can break it down by yourself. Okay. So real quick, 500 to 5,000 or 1,000 to 10,000. You'll see this here. You're going to want to do this, or the way that I'm going to do this is with Euro and New York sessions. Primarily, it's the only sessions that have the most amount of volatility. Some people will argue to you and say, some people will say, hey, John, I like to trade Asian session. Cool. I don't like to trade Asian session. I think Asian session has way too much choppiness and volatility, and I don't like to trade within that choppiness and volatility. To be honest, I don't like to be at the charts at like 8 o'clock, 9 o'clock. I have a life, guys. Okay. I like to be in the morning, do my trading, and then chill for the rest of the day. I have a life. Okay. I'm not, maybe I am a nerd, but it is what it is. Okay. So the goal is 1,000%, right? Now, sometimes you can do this with one trade. At the time when we did the last flip challenge, when people were doing this, some people did this very, very fast, very successfully. Okay. And we had crazy returns. And I'm going to tell you guys why. The style needs to be controlled aggressive behavior. Okay. Controlled aggression. Okay. But it has to be driven off of what? The right expectations. So how do you create controlled aggression with the right type of environment for having the right expectations? How do you do that? The first thing that we must have with an RR is a high risk reward. Okay. This is the key. A high risk reward. There's not a single trade that I will take that will be below a 1 to 3 and maybe not even below a 1 to 5. If it's below a 1 to 3 or 1 to 5, I will not take the trade. Now, some of you guys might say, well, John, why are you doing this? Okay. The reason I'm doing that is because, again, with a 1 to 5, my win ratio can fall under, okay? My win ratio can fall under 50% and I'll still be profitable. Okay, my risk to ruin will still be profitable, or my recovery factor will still be profitable. It will be above a 2, right? So with a 1 to 5, I can go with a 50 to even 40% win ratio and still be very profitable. Okay, the math is on my side. So not a single trade will I take that's below 1 to 3 or below 1 to 5. My win ratio, I will try to keep it to a 60 to 70%. Now, am I at a 60 to 70% every month? I'd be lying to you guys if I said I was. Okay, I'd be lying. I'm not at a 60 to 70% every single month. No, I'm not. Okay, has there been some months where I hit 70%? Yes. There's been months where I hit 80%, specifically with gold. Like in January, it was like a 70 to 80% win ratio. When there's a lot of choppiness in markets, my win ratio will go from 70 to 80, sometimes to even 50 or 40. Okay. So a lot of this, and you guys can look this up too. Anybody that's telling you they're a consistent 70 to 80% every month is lying. There's Wall Street traders, guys, that have bad months. Okay. Maybe for a season it's at 70 to 80%, but you're going to have months where it's up and down. Okay, I'm just going to be honest with you guys. There's months where I have up and down trading. I make great money, and then some months I make barely anything, like a couple grand. Like, it's not impressive. Okay, so the pairs that you're going to want to focus on here, if you're starting with 500 to 5,000, the reason I'm going to go off the 500 to 5,000, not the 1,000 to 10,000 first, is because these people are the most susceptible to blowing their account. If you have $500, that is not a lot of money. Okay, $500. I mean, I spent that on Uber Eats, I think, the other week. I spent that on Uber Eats in like 2 days. Okay, I think my Uber, like it's not a lot of money here. So to do a lot with this, you're gonna have to be very careful. I'm just gonna be brutally honest with you guys. That's why the VIPs, I recommend at least $1,000 here, because you could do something with $1,000. Okay, this is going to be very difficult to work with, but we're going to try to do it, right? So obviously, what are we going to focus on next? What am I going to show? What am I going to show you guys? Okay. There's always a risk scale strategy plan. Okay. This risk scaling plan is key. So obviously, in phase 1, your risk is only going to be 5%. You do not want to move past 5% risk. This is key. And I'm going to repeat this again. The reason you're doing this is because you're building some type of pillow. You're building some sort of equity. You want to not be trading any of the $500 or taking risk on the $500 at all when you're getting into phase 2 and getting into phase 3. The reason being is because once you're at phase 2 to phase 3, okay, you want to start scaling. You want to start scaling with profits. You do not want to be risking, okay, your own money. Okay, after phase, when you hit into phase 2. Does this make sense? Drop some sevens in the chat if this makes sense. Okay? Drop some sevens in the chat if this makes sense. I'm opening up the live chat, guys. Drop some sevens in the chat if this makes sense. Okay? Okay, here we go. All right, great. Sevens, I see the sevens dropping. I just want to make sure. Okay, so now this is what we're going to talk about here, okay? Just like we did last time, guys. I'm going to show you guys some of the mistakes that some people made and some of the profit gains and wins and losses some people had last time, okay? Now, the goal here is, obviously, when you're starting in phase 1, let's first actually talk about the starting balance and why this is so important. Phase 1, you're going to want to get to at least 3 trades that are profitable at a 5% risk at a 1 to 3. What would that put you at? That would put you at a 15% gain. Okay? So simple math, guys, 500 at a 15% gain would be $75. Okay. Now, obviously, this is double the money. If you're in $1,000 account, that's $150. There's a clear reason why I'm telling you guys on the 500. Again, I will do it for 1,000 for VIP on the VIP call on Tuesday. Okay. So here, $75. Why? The $75 here is going to be our next risk. Okay. Because we're risking only 5% of the 500. So at a 5% risk, you're only risking $25 on the first trade here. Why? We're not trying to make money on the first trades. All we're trying to do gain. That's all we're trying to do. Why? I want to build a breathing room of at least $225 to $250. This is what I like to do. This is how you slowly compound the $500. Okay. So $500 plus 225 would lead us where? Where would this leave us? Okay. This would, in a perfect world, let's say we get all of these correct. We want to build this until we have $225. Okay. That would lead us in a perfect world to $725. Why? This $225 now becomes our risk. Okay. Because now what we do is we increase our risk from 5% into 10% of the account. What does that 10% of the account when we go into phase 2 mean? We're going to take 4 to 6 trades at 10%. That means now we are going to be risking with Euro, GU, and gold. We're only going to be risking 10% of, what was it? $725, which now equates to, well, you look at that, $72.50, about $70. Why? Why would I be doing that? Because look, at a 1 to 3, let's say I lose 2 trades. Now, I'm going to give you guys a scenario. If I lose 3 trades in a row, I'm back at 500. Do you see that? Let's say I lose 3 $70 risk trades in a row. I'm back at 500. You see that? So it would move me back from phase 2 back into phase 1, and I have to start over again at 5% risk. This is how I scale. But let's say I'm stuck here at phase 2 for a while. Okay. So at phase 2, let's delete this here. At phase 2, right, we start first at phase 1, where that 500 turns into, with 225 in profit, let's say I hit all 3 trades, that would make it $725, right? Now that means I have about $225 to risk, which breaks down into $70, about $72 to risk at 10%. You see what I'm saying? It's risk scaling. This is how I grow accounts. So now we have 225. That means I could either go for 2 trades at $100 each at a 1 to 3 or 1 to 4 and hit for 400 or 500. Or what I could do is I could be conservative, hit 10% at $72 each. Okay, what would my risk reward be? If bare minimum, if I hit a $72 trade, hypothetically speaking, at a 1 to 3, what is that? This is basic math. That would mean I would make about $216 on every single trade. Okay, you guys see the math? Simple math, not that hard. Okay, very, very simple. Now, if I do this correctly, $72 risk in phase 2 at a 1 to 3 at 216, all I need to do this is I need to do this 3 times to build up equity of a total equal amount of $648. Okay, I'm showing you guys the math because this is how you scale accounts. This is how I scaled my account. This is how I scaled. What was my largest flip? My largest flip. I mean, I took like 40K to like 70K for somebody one time, like 70K in profit. And this is how we did it, but we did it a little bit more. This was a little bit more high risk. Okay. Ours was because you're dealing with 60, 70K, so it's completely different numbers. You don't really give a shit about like you can be a little bit more conservative. You don't have to go too high risk. Okay. So obviously 648, right? So that would leave you with a total equity of about 1,148. You stay in phase two until you hit about 6 trades, okay, at a 10% risk. So what do I mean by that? When you hit 6 trades at a 10% risk at a 1 to 3 at least, okay? Very simple. You want to grow the equity to at least 500 plus about, it's $1,300, but it's like 1,300, but it's, what's the exact number? It's like 1,296 or something like that. Yeah, it's about like 1,800, but let's put 1,896 to be exact. You want to grow your equity to just under $2,000 in phase two. Okay. 1,786. Okay. You stay at 1,786. Okay. And then what you do is we can say, just so it's easier for you guys, because I don't want you guys to get confused. Let's just say $2,000. Okay. Let's just say 2,000. It's one more extra trade, but it is what it is. Okay. I don't want to confuse anybody here, because then people are going to be like, John, I'm confused. I don't want to hear that. Okay. So $2,000. Let's do that. It's close enough. It's one more trade, but it is what it is. You want to stay in phase two until 2K. Okay. You stay in phase one until what? Until you have $700 to $800. Okay. So remember, $800, you stay here, then you can move along. You have to build this to $2,000, then you can move along. Okay. And the math is going to be easier if I use whole numbers. Now at phase three, very simple. Okay. We could still use the same number. It's like 1,796. Okay. At 1,796, you're going to now start risking what? Exact numbers, 15%. So I'm going to go off of the 1,796 number, guys. Okay. 1,796. Exact numbers, 15% risk. Your risk per trade will then start to scale to 269. Okay, 0.4. At this moment in time, you're going to want to stay here at this risk, staying at a 1 to 3. Okay. Staying at a 1 to 3 for at least 6 to 7 trades. And you can stay in phase 3 all you want. You can stay in phase 4 to go to 20%. I would stay for most traders at phase 3 at a 15% risk. Why? Because if you lose 3 times in a row, what happens? At 296. 296, you lose 3 times in a row, you lose $888. You're back at $1,000 over here, and now you're back at phase 2. And then you have to rescale and start again to get back to phase 3, and you have to lower your risk, right? But at phase 3, stick here until you can get the equity up to 269 times, let's do the math here. This, you should stay until you get your equity up to at least $5,064.90. I mean, and $9 right here. This would put us here at about 50%. Well, this would complete actually the entire risk scaling plan. But there's the reason I put 20% is between me and you guys. I don't know how this is going to sound. This might sound a little nuts here, but I'm going to say something to you guys, and you can take it how you want to take it here. And some of the best traders will even tell you this. Okay. You want to follow the rules until you can learn how to break the rules. Okay. And I'm going to say that one more time. You want to follow the rules until you can learn how to break the rules. And what I mean by that is there's going to be a setup that I might take, you might take, and there's a couple people that might see me take it where the alignment is just perfectly. And I can't even explain it to you guys. It's just my intuition. Some people might say, no, I'm not getting in, I'm not doing it. Or some people might get out early. But there's been a couple trades I've given out, and I've talked to students about it, where I'll lose a trade and that later that day I'll get back in, and I just can't explain it. It's like something in my intuition or in the back of my mind. I almost can't explain it. It's weird. It's like instinct, and a lot of times you build that with just your experience with it. And that's where I'll risk a little bit high risk. Like I'll go 20% and just say, screw it. And if I do end up losing, like let's say if I'm at 5,000 and that ends up happening because I see multiple confirmations, right? Let's say if I'm at 5,649 and I do risk 20%, it basically means I'm risking $1,000 per trade. Okay. 1.29, like 1.1. Yeah. You see that? $1,129 per trade. But the reward for me on that would be a 1 to 5. I'm looking for $5,000 on that payout. And that's how you complete a challenge. Right? Now, again, this is with this structure, you can flip an account. Now, sometimes it might take a week, it might take a month, it might take even sometimes 2 months, 3 months, or, sometimes it takes longer than expected, but it's all dependent on the person and what they're willing to risk. On the last flip challenge here, you guys can actually look in January when we were doing all this, you saw that there was guys that basically got it done in like less than 2-3 weeks. They just went a little harder on some of the trades. And then you saw some guys blow their accounts. They went hard on the wrong trades, or they went to trade by themselves. Okay, so I'm not here. I'm not your financial advisor. First thing I want to let you guys know, I am not your financial advisor. Okay, this is all for pure entertainment purposes, and I must say that legally. Okay, so you guys can do what you want to do with your money. Okay, I'm not telling you where to buy and sell. I'm not telling you, okay, buy here, sell here. I'm not your financial advisor. You are doing what you want to do, and you are just following what I am following. I'm going to make that very, very, very clear here for legality purposes. Okay, I'm just showing you what I do. I'm showing you what's helped me make results. Does that mean you're going to have the same results? Maybe you'll have better results. There's people that have had better results with me. Maybe you'll have worse results. Okay, so in the last challenge, I'll break that down over here as well. Okay, in that last challenge, right, you will see that very similar things ended up happening, right? You will see that people were taking the same trades but having different results, right? So you will see that, and I think that's very important for you guys to also understand. And don't look too much to the left of you, and don't look too much to the right of you. Okay, I get that a lot of people are winning. Don't get jealous, don't get envious, or feel like move at your own pace, please. Okay, because everybody has a specific timing to win, and if you look too much to the left of you or to the right of you, it's gonna hurt you at the end. Okay, and I don't want you guys to like compete with one another. You want to be competitive here, but you want to be competitive with the best version of who you are, not with people. Trading is a psychological game. It's not a game of competing with other people. Okay, it isn't, right? It's a game of what? It's a game of competing with yourself, right? And also I can make a whole argument, like a spiritual argument, that like if you're already trying to compete with people, you're technically operating at a losing frequency. Because think about it, like there's a book called Tribal Leadership, and it talks about how like a level 4 person who tries to compete if you're already trying to compete, you're basically losing, because somebody that's in competition isn't operating at the highest caliber of like their creative faculties or something like that. So it actually says that people that try to compete in life are actually vibrating at a lower energy, lower frequency, because the best inventors in the world, they don't try to compete. They just focus on what's possible. Like the 1996 Chicago Bulls team focused on what was possible. They weren't trying to compete, right? Apple, when they were innovating the best computers in the world, they weren't looking at Microsoft trying to compete. They were just trying to focus on what's possible. How can they push the world forward? Okay? That's what Apple was trying to do, and that's what invented the iPhone. The iPhone has existed since the beginning of time. It was just up until recently, the last 20, 30 years, that we were able to tap into the technology, but the technology has existed since the beginning of time. It's just we were able to tap into that frequency to be able to bring it into our reality, but it's always existed. The technology of, or I would say the materials to create the iPhone has existed since the beginning of time. It's just recently we were able to create it. So everything you guys need to be successful with trading, have a successful career with this, or even make a lot of money in this already exists. All the tools are out there. Okay? The version of you, it already exists. Now you just have to tap into that level of vibration and frequency of what you want, and what you want cannot help make it in your reality. Albert Einstein, right? You just have to match that level in order to bring it into this reality. Just like the iPhone has existed since the beginning of time. The car has existed since the beginning of time. It took one man and one woman to see it, okay, one man essentially, and one woman to see it and then bring it into our reality. Okay, I'm not trying to get spiritual here, but this is just the reality of it, right? So realize, just go through the education, guys, and see it. Okay, this is the last thing I'll talk about it. Then I'll look at some charts here for the next 10, 15 minutes. Okay, but again, like you'll see it, right? You'll see like the last flip challenge here. There was some people that were making great money, some people that were doing small flips, some people that were doing big flips here. And you saw the small gains over time, right? Small gains. And then you'll see it slowly compound, slowly grow, right? People were slowly compounding and slowly growing it, right? Slowly growing their accounts, right? That's what it's all about. And that was just week 2. So don't rush it, right? Again, you'll have some people that are making more money, right? Maybe 10, 20, 30K, but don't rush it, okay? Please, all right? Again, and yeah, you'll sometimes have people do some crazier flips, right? But again, don't rush it, okay? Again, don't ever try to rush stuff, right? That's the core key to it, right? And then again, people are going to have bigger days. Focus on your growth, okay? Because obviously people at this point, week 2, week 3, were doubling their accounts, tripling their accounts at that point. But again, stay to the game. Some people were on smaller days, having smaller days. Some people were having bigger days. Focus on your growth, okay? Please. All right. So let's now mark up some charts here, okay? Oh, last thing. What I recommend too is slowly scaling from, let's say, Euro USD to GU, a little bit more conservative, to then slowly scaling into higher risk pairs like gold. My win ratio on gold is really high. And then slowly scaling to SPX and some other high risk trades. Okay, now let's get to it all. Let's get to all of it here in just a bit. All right, let's look at the charts here. Let's look at what's happening. I picked actually the worst month to do this flip challenge too. Some of you guys might be like, well, John, why is it the worst month here? I picked a bad month because technically the month of May is technically on a very bearish month. There's low volatility, and look, yeah, no volatility today. You see that? 0. No. We do have some good news here. ISM manufacturing PMI, it looks like it's neutral. It'll be lower than expected. Anything below 54 is lower than expected. So bearish, a little bit bearish, but not going to affect markets too much. This is a little bit bearish here. Okay, a little bit bearish here. Not going to affect markets way too much. Give me a second, guys. Okay. Yeah, starting to flip it. Okay, so we do have some bad news. We do have some pretty bad news, and that's going to be in February. Okay, I'm not going to lie to you guys. So this is going to be a real freaking challenge. Yeah, somebody said May go away. I mean, yeah, dude, May go away for sure. You're supposed to not trade in May. You're actually like my first ever mentor told me that I shouldn't be even looking at the charts in May. But you know what that means? That means that we're gonna be trading. Also, for everybody that's still on here on the call, make sure you're on the Flip Challenge chat, okay? Make sure you're in the Flip Challenge chat for updates. I'll be giving updates in this chat here, okay? Please make sure you're in the Flip Challenge chat. If you're not in the Flip Challenge chat, you're screwed, okay? To be added to the Flip Challenge chat, please message Shania or message Nadia, please. Okay. Because I probably am really busy. This right here is bearish, right? So this is kind of what I was expecting here. NFP dictates market trends, okay? So last trend for April was ridiculously bullish. You saw NFP being bullish, and you saw what happened to SPX. We already have expectations for NFP in May to be bearish here. So what does that mean? That means market pullbacks here, okay? Big market pullbacks here. So if this is correct, like I assume it's going to be, it could mean that we're going to have a very big pullback here in markets, which I'm looking forward to because I feel like SPX is just way too high right now, and I'm looking for a pullback on it. So if NFP this week, it'll dictate our whole trend. So this might be a slow week, but Friday NFP will tell me, okay, all of May I'm going to be swinging bearish, which will be good. Let's look at something else here as well. The trade DNA will also be out as well. So I'm going to be trading with the trading journal, which will help a lot of you guys grow and make some really good money with the trading journal. But hold on, what was I going to look at? Okay, I want to look at seasonalities. Let's look at seasonality here. Because we are in a new month here. Oh man, it's going to be a long stream. Yeah, May usually for Dixie, market tops tend to happen around mid-May. Okay, so seasonality tends to be bullish here for Dixie. Interesting. May is bullish. Wow, you see that? See that, guys? May is the most bullish month for dollar index. What happens when the dollar index goes up? Usually markets go where? Down, right? Markets go down. So seasonality, you should already expect prices will probably be bearish. Let's take a look at SPX seasonality here. Average 0.35%. This is based off what? Based off the last 10 years. That's a 10-year seasonality. No, 15-year seasonality. Let's look at bar chart is okay. I don't really like that one. That's unusual. Wells has a little bit more data. Will it give it to me for free? No, these fuckers want me to subscribe. So annoying. Sorry for the swearing, guys. Interesting. Current year. 83% correlation. Look at that. 81% correlation in 2007. That is wild. That is so wild. Yeah. Yeah, May tends to be a little pullback here as well. Okay, so last one I'll take a look at too is going to be... Which one is it? Where did it go? Let me, gold future seasonality. May starts its bearish move for gold. Gold's bearish. SPX is bearish. Bitcoin's bearish. Bitcoin's worst month is what? Bitcoin's worst month is in May. Let's look at BTC seasonality. I'm pretty sure Bitcoin's worst month is in May. I'm counting on it being May. And when you look at that, it's in May. Interesting. Hold on. It's in May, depending on what seasonality year. Well, if we're in a bearish cycle, it's May. May and June, you see that? This is the bearish month. This is the bearish cycle. 2026, we're bearish, and then 2027, we're bullish again. So this is bearish. Technically, Bitcoin should have been going down already in April here, based off bearish cycles. Like 2022 was the last bearish month, the bearish cycle, based off the 4-year cycle. 2022, May was the beginning of the downturn, and then 41% downturn in June. So technically, you're overdue for a massive. And then you have August, which are slow months on SPX. Yeah, if we see SPX do some type of downturn right now, the indices have been getting saved by the big 7 because of record-breaking profits, right? So I expect this thing to drop. Okay, I just took a quick look at seasonalities. One last thing I want to take a look at here. Oh my god, my neck is freaking killing me, bro. I need to go to the fucking... I'm sorry if I'm swearing, guys. I need a stretch, man. Going too hard at the gym. Whoa! Oh shit! When did this happen? We got a higher percentage of a rate hike in 2027. That is not good, dude. How is that even possible right now? Wow. Okay. They're gonna fucking rug pull us here in 2028, and then on 2027 we're gonna get rug pulled. Wow. I don't know if I believe this. I don't know. Would Trump allow that to happen? Would Trump allow a rug pull? I just don't know. We start hiking rates, man, markets are gonna for sure head downward, you know. Okay, let's take a look here at what's happening here. So let's take a look at Dixie here, guys. Okay, my thought process here, Dixie's pulling back. It's gonna most likely pull back here. Oh damn, it mitigated already, I think. Yeah, it did. It's gonna continue to keep extending most likely. I have it going to fill the gap. So that gap will probably get filled and will also mitigate this zone. This gap has to get filled, guys. I've been waiting for this. I think it's going to happen here. SPX. Let's take a look at SPX. SPX broke through that structural zone. Technically, it's bearish, even though it mitigated off of this zone. On a buy. I don't want to buy it yet. Let me look at what I'm looking at right now today. Most likely tomorrow, if we have a close below this structural point, it'll break lower. Most likely I'm going to sell tomorrow, but it looks like a solid buy if we do extend to the upside, but it looks like Dixie wants to break higher. So most likely by the time I wake up here, this thing is going to drop. It looks like it's setting up for a break of structure of this indecisional candle right here, and break of structure here. Okay. Let's look at US 30 here. I was waiting for shorts here on US 30, but nothing happened here. We had a swipe of liquidity to the high and then just boom. Let me look at this here. Why did I send this out? This was a long time ago. This is Thursday? When was this? Oh, what was I looking at? I think I was looking at a dump here. This is weird. When did I set this up? Why is this... Why am I trying to sell here? The market's not even there. If there's a break, probably what ended up happening. If there's a break of structure here, then you want to sell. That's what ended up happening. It went up and then sold off. NQ looks bullish here from this mitigation. Let me look at Russell real quick. Yeah, dude, all of this looks kind of bearish here. This here looks really bullish. NOS is the only one that does, though. Breaking all-time highs. See that mitigation on external time frames? Looks like it'll go higher. AI profits are really, really making SPX move to the upside heavy. Let's take a look at oil. This is bad. Oil did exactly what I called out on Thursday, though. You see that? Pullback. Swipe of liquidity here. Mitigated this zone. It looks like oil wants to break highs. Oil closes above here. Oil's going to go higher. This right here is like a really bad zone right now. If oil breaks above this on the 4-hour, that's not good. Okay? You want to watch this zone here specifically. I think I even put this, that's so funny, on the daily. Look at that. On the daily, I literally put a fucking huge arrow pointing to that zone. That's so funny. Yeah, no, this zone here, we break above this, guys. Oil is going to all-time highs, which is really bad. Okay. Spirit Airlines, a lot of people are blaming like what happened with Spirit Airlines because of the whole thing with like them being in debt. Obviously that played a huge role. They're the lack of the merger here. But why did Spirit Airlines go bankrupt? It couldn't get a bailout, right? Okay. Even like you got
that prices for an awful lot of things will, you know, I've compared the markets to a church with a casino attached, and people can move between the church and casino, and
let's look at Iran here. Just want to see some updates on the Iran war. See if anything's getting easier or if it's getting worse for everybody. Well, that doesn't look good. Looks like it's getting worse. Okay. Iran releases the first footage that shows 2 Iranian missiles hit multiple U.S. ships. Is this true? Grok, is this true?
Where countries begin to get a little nervous about things is whatever inventories they have. Some countries have strategic reserves. Every country that imports oil.
We have strategic reserves, guys. So we're good for about 45 days. But that strategic reserve was about 30 days ago. So we're not going to feel the effects of oil until 2 weeks. That's when I believe oil will go 150 a barrel.
Oil has what we call commercial reserves, the tanks outside the refineries. And when you add those two together, and you look at how much oil that nation is consuming on a daily basis, you divide one into the other and you find out how many days of inventory they have on hand. And when you get down near like 24 days, that's where the panic starts to set in. If you got below 20,
Wow. U.S.-Iran negotiations are over.
Matter what Americans think?
Well, it matters
every bit what Americans think. That's why
Okay.
Americans vote. It's why Americans have the opportunity to have free speech. We want them to have that.
Okay, so
I am very bearish on markets, guys. I'm not going to lie to you. If this thing breaks above structure, we're no longer negotiating. We're in May. Dixie fucking mitigates this. SPX is a sell. The real question is, where will SPX sell to? That's the $1 million question. Because it won't go down forever, because we'll have a really good buying opportunity. But where will SPX sell to is my question. I think there's a real possibility that we can go down here. For sure. There's a real possibility of it's going down. Even here is a really good price. But hopefully May can bring us at least a 4% pullback. I don't think it'll be as bad as this here in March. This here is insane that this was going on in March. Ridiculously insane. Oil going. Okay, let's look at gold. Well, called some gold buys. We hit first take profit, second take profit, and then third take profit, fourth take profit was just missed earlier in the week. Completely fine. I was taking a look at this yesterday. I wanted to see, because of this break of structure, gold hit this higher high and bounced off this zone earlier today, but it didn't. The biggest reason was because of Dixie. Dixie was not going to turn around. I thought Dixie would go a little bit lower, but Dixie looks like it's on a rampage to take out these highs here. And if it does take out these highs here, then we're going to see what? We're going to see some panic selling on SPX and gold here. Okay. What does that mean? I mean, just like how it means before, I'm most likely going to sell gold here. Tomorrow I'm going to sell gold, guys. This is a false rally here. Swipe of liquidity. I'll probably sell gold here. Or here. Or here. Tomorrow. All right, guys, I do have to run. I'm like over 10 minutes here. I will mark up the rest of the charts tomorrow here. Go over them. BTC still looks like it's moving to these highs. To be honest, let me see this here. Let me look at the daily here. Give me 1 second. Oh, wow. It did break daily structure. There is a possibility we take this out, swipe this, or mitigate the high of like 82. I'm still bearish on it. I'm not bullish on BTC at all. With these market conditions, I think it's just being manipulated, to be brutally honest. It's just delayed movement to the upside from SPX. I do not see Bitcoin jumping up higher though. I'm just being honest with you. I see this order flow. I might move my sell and my stop and make it higher, but I still have the belief Bitcoin's going to 50, 40K. All right. I'm usually never wrong. I'm always just a little early. All right, guys. Appreciate y'all. Love y'all, and I will talk to y'all soon. Have a good one, guys.